Hi, so I think this episode will be a little bit more special. It's a slight deviation from the usual presentation or talking head style. I'm updating you about the markets and my thoughts. But I think more so, I haven't really confirmed or finalized the title yet, but it will probably be along the lines of my thoughts, my reflections, my learnings about having invested roughly around $200,000 by the age of 26. And of course, I don't want this video title to piss people off, to trigger people or rub people off the wrong way or what it's not intended. It's really the idea of sharing my reflections over the last 7 to 8 years since I was 18. And I guess the genesis is really on three main points. Firstly, I'm using the platform, the YouTube platform, as a form of a digital diary entry so that I can come take a look at it again in the future on what I'm thinking and how things have evolved over the years. And I think secondly, it's also really to share a different point of view where some of you have been asking about how I did it, what's my journey, what's my experience like, etc, etc. And I think thirdly, I don't know why, recently my YouTube algorithm have been serving me this type of financial independence content around the topic of FIRE. You have personal finance YouTubers talking about 4% rule, etc, etc. So I just wanted to chime in on it and give you a different take, especially when a lot of the creators are more from the westernized point of view compared to myself, which I'm based in Singapore. And I guess for netizens that are triggered, I hope that you go slightly easier on me when smashing your keyboard. I try to share as transparently as possible, and also you can give me as much like as you want to. So this is a bonus episode. I know that it's earnings season. There's a lot of volatility in the market because of the US election. There's this China stimulus that is potentially coming, so on and so forth. So we'll go back to that after this bonus episode. So I think before I speak, some of you might be skeptical, so I'll just post a very quick screenshot here to show you where that $200,000 came from. So I believe that if you want to do a benchmark comparison, and my current age at around $200,000 in terms of, I don't know, investable assets, capital, net worth, I'm probably slightly above average. I don't think I'm extremely well off, or at least I don't think that I'm in the top 1% or top 10%, because I do know of friends in similar age group, probably 1 or 2 years older than me, and they are already in the millions. Most likely, they're either in sales, whether it's in insurance or property, or they're starting their own business. So that's where their income is very scalable. I think for myself, I'm still closer to the mass public in a way where I do derive an income from employment. I do have some sort of a self-employed income, even though it's not a lot, and I'll talk more about it later on as well. So yeah, I do identify closer to the mass public or the normal layman. I'm a plebeian too. But anyway, I think in terms of a contextual understanding, I was asked this question a few times before in the YouTube comments below, and I did type out roughly on where I basically derived majority of my income and how I managed to save up to this amount of money. And I think long story short, this is basically a very quick summary. I think my first 5 figures, first 5 to 10K, is really through just pure forced savings by my parents. Because in the Chinese culture, as you know, we do have this tradition, this yearly family gathering during Chinese New Year, during the Lunar New Year, where relatives come around, they give red packets to the children, and basically you don't get to touch the money. The money is being saved automatically to your bank, and the red packet also isn't accrued to my own bank account. It goes into my parents' bank account for whatever reason it is. But I think that's a typical Asian culture. So that really kickstarted and built the habit of savings and being able to see your money grow through pure hard work, because there really isn't any skills involved. It's just you turn up every year, you get the red packet, and then you pass it to your parents. I think secondly, also for my global audience, for those of you who don't know, in Singapore, males after the age of like 18, you are forced, actually I shouldn't use the word forced, you are proud to be serving the nation because we have a conscription basis where males all have to serve the army. And in the army, you have different ranks. You can perform well, you get a higher rank, you get remunerated, or you are given an allowance. And I think through that 2 years of my service, I also managed to save another 10 to 20,000, because I think it's really just very easy math. And back in my times, I think a recruit at the lowest rung of the entire service, you're remunerated, or your allowance was around 600 plus or 500 plus per month. And after that, I passed out from the course. I got around 880, closer to $900 a month. And you just do a very quick blended calculation. Let's say you get $700-800 a month, and you multiply it by 24 months. I think you very easily can save 10, 15, 20,000. And I say very easily also because let's not forget, you're in camp from Monday to Friday. Food is being provided, accommodations is being provided. The most you spend is probably during the weekends, and also maybe sometime on a few nights you get to go out and you buy better food. I think that's about it. I think the biggest killer for most Singaporean guys is that they spend a lot during the weekends. Whether is it with their partner, which is their girlfriend, that could be a big expense. I do know of a lot of friends that spend hundreds and thousands of dollars on watches, on jewelry, on their partner's gifts. And on the other hand, you also have another group that goes out drinking a lot. And I think, fortunately or unfortunately, I know that some of you will say that I don't know how to enjoy life, but I think I have really limited kind of my exposure to going out and drink because I know it's a very costly endeavor. And back then I didn't have a partner until quite late, until after army. So I didn't necessarily had a lot of all these big expenses. So that's another 5 figures. So you can just add them up. So by the time I finished my conscription, that was I think around 19, 20 years old, thereabouts, I already have at least $20,000, $30,000 saved up purely from just sheer hard work. And of course, I think for some of you that do follow me, I did share with you that my dad has been a very heavy investor in the Singapore market, and he has introduced me to the concept of the stock market very early on. So I managed to also go into the Singapore market, buying a blue chip dividend stocks, getting a little bit of passive income here and there for some time over the years as well. And yeah, I think back then when I bought into some of these stocks, there was slight capital appreciation, but there were a few $100s in terms of dividend income coming in, I guess, every half a year or 1 year. So that was also another big boost in terms of getting your capital work harder for you from a very young age and being exposed to the idea of investing and letting your money work harder for you. I didn't hear it from ads or I didn't hear it from friends or when I started earning money. I was actually exposed to this concept very, very early on and at a very, very young age. So I think that's the second part. So I've talked about my very early childhood years, then proceeded on to the conscription, the army phase. And then after army, I think I was waiting for my university to commence. It was a good 7 months before it started. And I think I had a very interesting conversation with my dad and I asked him, hey, where should I go or what should I work as? Typically, I think a lot of people try to go for the highest hourly rate kind of work. So I think banquet back then were paying at quite a decent amount, like $12, $15 per hour. And also another form of, I guess, good money was serving tuition or giving tuition. But I think not to go too much into the details, I did took up a few students here and there, not very aggressive. I wasn't earning big bucks from there, but I kind of just gotten a habit of just saving money, trying to get more income. And also during that 7-month period, I really tested out and honed my skill set of speaking, which is I went into a sales job. That 1 week, I think I did close to $1,000. And if you're able to replicate it, of course, it sounds great. You get to earn $4,000 a month, but that's clearly not the case. You know that there are up seasons and there are down seasons. But I think that really just gave me a flavor into understanding of what they mean by being paid by performance rather than being paid by your time. So that's the second part. I think thereabouts, after even uni started, I was on and off. So moving on, I think after having invested in the Singapore market and not looking at too much capital appreciation, I think in 2020, after that COVID crash and that very quick recovery, I started dabbling into the US market. I bought into some of this, like your blue chip names, your Apple, your Microsoft, your JP Morgan, and they did pretty well. I think it was a very quick trade, but it was a good trade because a lot of them all made quite a bit of capital gains. I think you put in 10K, they go up like 20-30%, you get 2,000-3,000 and I think it's not even within 6 months. I think it was within a few months. So that was the time where you just buy without much expectations and you know that you're buying the good companies and then they just make money and then you think that you are at the top of the world. But I think that's another story for another day. But long story short, after that episode, I saw the Hong Kong market started crashing and that's when I cashed out my US position and I started building my Hong Kong position and going all in, as some of you might know. Fast forward, I think in 2022, after that whole inflation, recessionary scare and there was a pullback, a bear market, and that was I also started adding into my US positions as well. And then there you have it, every month in, month out, I'm getting income, I'm getting any sources of money, I'm just going to allocate to the market for the last, it has been 7, 8 years now. So yeah, more importantly, I think within that time period, I was in university for 4 years. So within that 4 years, I did roughly 3 internships. I've forgotten which was the time period, and I did 1 semester long internship, meaning for at least 6 months. And I can only tell you that because I studied finance, and roughly, I think finance internships do pay generally a lot better than normal internships that probably give like 800, 1,000 or 1,002. So yeah, that was another source of great deal of money, because if you really just count, I think even just saying a blended $2,000-3,000 for 6 months, that's another 10, 15, 20,000. So the idea of having higher income versus your outflow or your expenses, because if you are able to really save 50, 60, 80% of your income, I think that's really a superpower that a lot of people underestimate. More importantly, I also started a YouTube channel. So YouTube did help me a bit by giving me in terms of AdSense and opportunities to connect with people and maybe some brand sponsorships here and there. And for those of you who are really thinking that I'm printing a lot of money from YouTube, I don't mind sharing. So I'm just going to post a screenshot here to basically what's the AdSense dollar that I get every month. I think sometimes, or most of the times, I don't even get like $500. I'm not too sure why, because a lot of people are saying that, or at least based on my research, I see that the finance niche gets a very high cost per mil, which is the I guess revenue that's generated per 1,000 views. I think it's generally higher than normal vlogging or lifestyle channels, but I think it's still on the lower side compared to other finance related channels. So yeah, but I'll share more in terms of the breakdown of my expenses and how YouTube helped me, but that's one. And I think a second part really is because I was able to propel and to push myself forward into the public eye, I then get writing engagements or some other engagements for me to do analysis or research, or people just wanting consulting, meaning just buy like 1 hour or 2 hours of my time to talk to me. And that was also another part where I did a bit of ghostwriting here and there. I did take on a bit of calls, usually cold, meaning I don't offer this as an official service for people to book me on a Calendly or something. It's just I have to suss the person out as well. And I'll talk to the person maybe via email or via LinkedIn. And maybe after a short chat, they want to go into a deeper discussion or want me to do some work for them. That's when I get paid on a per project basis. So that also helped kind of boosted my income along the way. So I think the overarching methodology is quite simple. I think on one hand, you definitely need to focus on trying to improve yourself, improve your skill set, try to get more income sources. Really also focus on doubling down in terms of your expenses and don't let lifestyle inflation creep in. And fortunately or unfortunately, I was part of the COVID batch and a lot of things are being done online. We were in the very great transition phase and people were adapting. I saved a lot on transport fees. And also, if you really think about it, I didn't have a partner until much later on. So my expenses were really kept at a very low rate. And I'll share more in terms of the color and how much I actually spent in the later part of this video. But last but not least, of course, I need to acknowledge the great amount of privilege that I enjoyed over the last 26 years or so. Because number one, I do have more responsible parents. They are fiscally responsible, so they do plan out their retirement. They don't really need my contribution immediately. Maybe in the future, yes, but I think in the immediate sense, I don't have to take care of them or have a very large outflow. So I think secondly, also not to deny the fact that my parents did pay off my university loan, so I didn't start off my net worth at a negative territory. I do know of friends with negative $30,000, $40,000 in their name just because they didn't have help from their parents. So these are just different privileges that people often don't acknowledge, and I just want to put it out there. Thirdly, of course, my parents are healthy. They don't have immediate medical concern. Fourthly, I think also with my partner right now, we are together for more than 1.5 years. 1 year and 9 months now. Everybody's on the same page. So you don't have the constant struggle or the constant argument about difference in terms of monetary value, how we look at life, etc., etc. So that's another privilege. And of course, last but not least, it's really the idea of being exposed early. So having exposure to many of these financial concepts early, like building good habits, expenses tracking, don't spend over what you earn. And I think there's this Chinese term that I always float in some of these videos where I say that 钱要花在刀刃上 basically, you need to spend money effectively. I'm not saying don't spend money at all. You can spend money, but the money has to achieve the maximum potential. Like, don't spend it so frivolously and say that I just want to buy something just because I think that it's good. So I do have a tendency of wanting to spend money as well, because we are all humans. But I guess the idea or the challenge here really is being able to spend it effectively. And what do I mean by that? So personally for myself, I think I have two main pit holes in my life on where I actually do spend my money. I think firstly, it's really the idea of spending on gadgets. I'm basically trying to improve the efficiency of my life through technology. And I think secondly, it's on traveling. I do spend from time to time on my phone, on my camera, and whatever that I'm filming right now. All these are not small expenses. They are in the few $1,000 range. But I think the important factor here is that when I can cut back or when I can find great deals, I will pounce on it. So before I change over to this iPhone, which is the iPhone 15 currently, my previous phone was the iPhone 12. And the iPhone 12, I've used it until, I guess, last year, late last year. I've forgotten when I changed my phone, probably early this year or late last year. And even for that iPhone 12, when I bought it, it's actually second-hand. So to me, I don't want to pay, or at least I don't like the idea of depreciation. So when I buy a new phone and I immediately open the phone, the phone immediately loses value. So I don't know whether you consider this a fortunate or unfortunate thing, where you're accounting trained and you're able to think of it, or think of things in this kind of terminologies. But long story short, I think I was on the deal, I was hunting for a deal for a phone that is able to perform. And I really don't care about the defects, meaning sometimes you might drop the phone, there are scratches and whatnot. I don't really care, and I picked up a very good deal. I think similar to this iPhone 15 that I bought, I sometimes try to buy 1 or 2 generations behind. And this time around, for this 15, I did not buy 1 or 2 generations behind, because I managed to find one that had this crack on, and I think the prices were like really severely undervalued. So just to share, I'm not too sure whether you can see this. I think long story short, you can see some cracks. There is a dent here, there's a few scratches, and there's a few cracks here. So, and I think back then, I believe a normal iPhone 15 at the current storage space, I did my market research, it was around 1,003, and this was going off at half price. I think it was like $600 plus $700. And the only issue, the battery life was okay, and the only issue is probably because of the dent and the drop. So, I mean, I went down to the shop, I checked, there's probably 1 or 3 months guarantee, I've forgotten about it. And I thought that, hey, that's a great deal. I wanted to switch over also because my battery was slowly depreciating by a large extent. So yeah, I think it's really back to the idea of going back to investing psychology and philosophy, right? I do believe that value investing is really a way of life. You can't escape from it. Like, if you're a cheapskate, you are a cheapskate. It will be shown in your life and manifested in whatever ways. I think previously, before this new camera, my previous camera, I also bought it secondhand. So even though I like new things and to improve my efficiency and to play around, tinker around with this sort of gadgets, I also don't mind buying secondhand. So that's generally my take on this whole idea. So secondly, on the idea of traveling, on how I be more effective in terms of money spent, I always go for budget airlines. I tend not to go for your SQ or whatever that is a lot more expensive. I think even for hotels, I also try to find compromise. So actually life is just full of trade-offs. If you want something good, you want something fast, it's probably usually not cheap. And if you want cheap and you want good, it's usually not convenient, so on and so forth. So you have to make a lot of all these trade-offs when you're engaging in some of these activities. And thankfully, I think my partner has been very understanding, and I guess she's also on the same page. And I can tell you, just recently we went to Korea, and I booked this, I guess, hostel. Usually it's a 2-3 star kind of hostel that is quite cheap. It's, I think, less than $100 or less than $80 per night. But I didn't really read the review. I saw the star. I think it was like 9 point something out of 10. It was one of the highly rated ones, and I didn't really think too much about it. But when we really got down there, then I realized that, even though it's at a very good location, I think the only downside is it's a bit small, and the alley that it's in, it's a bit suspicious. So I wouldn't go too much into details. But yeah, I think the consideration then is about whether is it safe. Maybe for my partner, if she's overseas alone, I'll probably never let that happen. But if it's 2% and I'm relatively okay, I think it's fine. We just spend most of our time outside and go back just to rest. So yeah, those are just trade-offs that you need to take into consideration. And I do hope that my partner's parents don't see this. If not, they might be thinking that I'm mistreating her or something. But yeah, I think I guess you get my point. It's just different trade-offs that you are prepared to make when you are on this journey of trying to save money. So the idea of a money DAO basically means that you need to be clear of yourself. Everybody has a natural tendency or natural inclination in life. You like some stuff, you don't like some stuff. So what you can really do in life is really look at it objectively, know what you really enjoy, and when you're engaging in certain activities that you really enjoy, those will give you disproportionate amount of enjoyment, contentment. So you don't mind spending more money in those activities. And for the rest of the other things, you can really just cut your expenses to the bare minimum, and that's how you make the trade-off. So the idea of a money DAO, you just DAO up in things that you really enjoy and DAO down in things that you don't really enjoy. And of course, to end off this whole discussion, comparison is really the thief of joy. There's no point trying to benchmark yourself against other people because everybody are of very different circumstances. You're born differently, you enjoy different things, you hate different things. So really there's no point trying to think about why this couple or this guy or this girl is traveling so much, why are they spending so much money, why can they drive a car, etc, etc. I think those are very useless questions that don't bring you to where you want to be. So you are the main protagonist of your own story. So you're supposed to focus on yourself, know your own plot, and plan it out accordingly. What is suitable for someone else might not be suitable for you. And of course, I've received comments over the years where they say that, why are you living such a sad life? To others, they might think that my life is very sad. To me, actually, I think that I'm living one of my best life with great parents, responsible parents, with a great partner, doing something that I love, and just enjoying the moments in my life. I think that's something that cannot be underscored. So just don't let other people say otherwise to you and to tell you that, oh, this is the model life, you should be doing X, Y, and Z. I think let's just throw all these societal norms away. So there's also this age-old debate about making more money versus saving. I think, to me, actually, the answer is simple. Why not focus on both? And I don't know what your circumstances are today, but if possible, try to do some side hustles, pick up some other things that you can do to earn more income. And on the other hand, don't go out spending frivolously, and if it's something that doesn't spark joy, then just throw it out of your life. Don't waste your time there. Part of saving money, there is a limit to how much you can save. So a lot of people, after saving as much as they can, have to try to focus on increasing their income thereafter. But I do have a different take on that. I'll share more later on. Last but not least, let's talk about how I allocate my money today. So back to the idea, I'm not printing a lot of money from YouTube as seen in the screenshot just now. But I think some of my tips that I have is that for myself, I think it's a little bit more special. Number one, I really keep my burn rate very low. So by burn rate, meaning that my monthly expenses. So if I were to just smoothen out, like I guess my quote-unquote side hustles, I try to keep my expenses within the limit of my side hustle. So it means that it frees up most of the income from my full-time gig or my job, and I try to invest and save that amount. And I think here I just have two tips that I want to share based on my past 7 to 8 years of experience. I think firstly, I think you can start adopting the approach or mindset that you want to run your life like a company. So by being a company, it means that you have to track your statement of a balance sheet, the statement of cash flow, your expenses, your revenue, which is your income, and also your net worth. I started tracking my net worth, I think, probably from the last 1 or 2 years ago, and it really gives you the confidence and a very clear goal, because you don't know what you don't track. And similarly, I think for those of you who have been on weight loss journey and stuff, you go onto the weighing scale every day, and then you put on this mental note and to warn yourself that, hey, let's not eat too much today because of I'm afraid of gaining weight. I think similarly for the net worth and the financial health part of things, if you're to be tracking this every quarter, every half a year or every year, it gives you some perspective and a snapshot on your progress, and it gives you more motivation, to be very frank. After looking at this for the last few quarters, it gives me a lot more motivation to be saving more money and to have your eyes on the price. So that's the first tip. I think second tip is really the idea of paying yourself first. So I think a lot of people, in a way, try to settle their expenses first. I have daily necessities. I'll think about saving and investing whatever that I have remaining or what is left. Why not flip the entire equation? Try to work towards trying to save and invest for the future for yourself. Maybe you want to hit a target savings rate of 30-50%. Allocate that amount out first and then spend the remaining. Because I think people often underestimate how powerful your mind is or how powerful the body is in terms of adapting. So when you really allow yourself to spend $2,000 a month, you will really spend that $2,000 a month. But next month, if you start challenging yourself, saying that I spent 2K last month and I'm spending 1,000 this month, it will work wonders. Your mind will think of very fanciful things. They'll cut out of things that are non-essential and they'll spend money a lot more studiously and a lot more carefully. So yeah, I guess 2 points: running yourself like a company and paying yourself first. So these are generally my 2 main tips. Now, I think the last part really is the discussion around FIRE, which is financial independence, retire early. So I don't think this is necessarily a new concept. It has been a concept being rinsed and repeated in the whole personal finance space. I'm just going to add my 2 cents into it. To me, I honestly don't care about the retirement early part, because if you are really doing what you are enjoying, you'll find a lot of contentment. Of course, I'm not saying that I love 100% of my job, but I think to a very large extent, 70-80% of it, you enjoy what you're doing on a day-to-day basis. You don't have a huge struggle in terms of waking up every Monday. Everybody talk about Monday blues, and Friday you want to go for TGIF. I think those are natural, those are normal, but as long as you don't hate yourself or feel like killing yourself every day just to go to work and to drag yourself to work, I think it's a normal state. So that's the first point. So just at least hope that you have slight interest in what you're doing, you're building a career in something that you are interested in, and you don't feel like killing yourself. I think that's the bare minimum. I think retiring early as a concept is a very lucrative, it's a very exciting one, but I think actually, at least for now, I haven't retired yet, so I don't know what would the retirement life be like. So I can't comment much on it. But I think the first part, which is the financial independence part, that is extremely important, because it gives you some sort of a baseline confidence into understanding that, hey, if you have a lump sum capital and this capital is able to generate you X amount of returns every month or every year that is able to offset your expenses, and you are independent, meaning you are financially independent, independent of your boss, independent of the economy, independent of your partner, your parents, whatever it is, I think that concept gives you true confidence as a person to have autonomy, to have freedom, and to basically give the middle finger to anybody. I think that's generally what people are chasing for. They're chasing for the freedom, they're chasing for the autonomy, not so much chasing the money or chasing the capital. And that is something that is often very underscored. A lot of people are saying that I'm chasing the first 500,000, the first $1 million. I think they're not really doing that. They are chasing the ability to give the middle finger to anybody. I think that's really what we are talking about when we are discussing about the idea of financial independence. So for a lot of people, they feel suffocated. I mean, at least that's my own point of view, where you are binded or you're bounded by societal expectations, you are bounded by societal etiquette, and you don't dare to say something, even though you think that it's wrong, or you don't dare to express your real opinion. So you're constantly making things up or putting up a front and not being your real self, because you need to rely on somebody to get that income so that you can continue surviving in a way. So it's really this freedom that people are aspiring towards, not so much about the money. But to go deeper into the calculations or to the number, there's this famous rule that's called the 4% rule. Long story short, how much capital you need to be financially independent, all you need to do is the expenses that you expect moving forward on a yearly basis, you multiply that by 25, or you divide that by 4%, and you get your so-called FI number. So for myself, I did a very quick calculation. So to allow for some sort of a margin of error or some sort of a buffer, I did kind of project my number out to be around 1.2 million Singapore dollars, not US dollars. So that will mean that I get, at a 4% rule, if I'm able to invest it in good dividend stocks that give me 4% in terms of yield, that will roughly work out to be 48,000 per year, and that's 4,000 a month. So why do I set it at such a high bar, even though that I spend very little or I have a low burn rate? Because let's not forget, firstly, that's a projection to the future. So as we know, you have inflation, you have things that you want to do and accomplish that you are not necessarily doing it now. And I do presume that next time if I really do retire, so I'm probably traveling like 2 to 3 times a year. Maybe when I retire, I'm traveling 6, 8, 10 times a year. So the expenses naturally will drift up. So I think at 4,000 a month, I think that's fairly comfortable. In fact, I would argue that it's already very comfortable. And also, I think I haven't really shared how much I'm spending accurately every month. So in terms of an expenses point of view, meaning just pure expenses, I'm spending roughly, I think I try to keep it under $500-600 a month. And I often will hit that goal. I think the larger part of the expenses that we don't count is the idea of insurance. And for insurance, I spend roughly $200-250 a month. And I also do give a token sum to my parents. And I guess if you work out the math, everything, I think my monthly outflow should be around $1,000 or $1,200. But when I talk about my side hustle, breaking even with my expenses, I'm just talking about the normal expenses. So for the insurance and my parents' allowance, I try to offset it based on the bonus or different projects that I take in as and when. So I guess it kind of net off. I think specific to my current thoughts about saving and spending, you can kind of tell by now if you're surprised or surprisingly or unsurprisingly, I'm quite the nerd. I'm quite the introvert that I like to spend a lot of my time indoors. So for those of you who actually catch me outside, it's the rare moments that I'm outside, or I guess it's maybe I'm just clocking in the time for me, for my skin to get vitamin D or to go out and to see a little bit more people. But I think long story short, I really don't derive a lot of joy I guess being outside. I like to be intellectually stimulated, so I spend a lot of my time reading, thinking, and I guess investing has been really a very big playground. The world of investing has been a very big playground for me to learn and to play and to think and to challenge myself and the different ideas and theories, etc. So that's basically where a majority of my time is being dedicated to, and not forgetting I'm spending time outside my partner. But yeah, I think that's generally where I'm spending it. So on the idea of having that amount of money today invested, let's say around $200,000 in the market, I posted in my community tab where I experienced my first 5-figure drawdown in a day. And sometimes I always think to myself, I think it has been a habit since young that I'm constantly thinking about prices. So I might be comparing food choice A versus food choice B, and the difference might be $1, $2. And then sometimes when I log into my brokerage app, and then today I realized that I'm down like $10,000, for example. And I'm thinking, actually I saved this $1, $2, what's the point? On another note, or another example that I can give is that, so I do trade options from time to time. It generates decent income. I wouldn't say it's very big, but I am playing options from time to time. It's definitely not sure win, but I think 2024 has been a pretty good year. And sometimes when I look at things and then I trade in and out, you get a few $100s per trade, and then you think to yourself, hey, why am I spending so much time and effort deciding between the two dishes when it has a difference of, let's say, $2, $3, and within a click of a button or within a day, because somebody said something, the market decided to tank and I lose like $10,000, 10,000 meals, let's say the difference or delta is $1. And sometimes I also don't really know or understand why I have this thinking or mindset. I think it really has become a habit really where I'm always comparing prices, and I guess it's more of a scarcity mindset. So I'm slowly working towards trying to change a little bit more. If I really do enjoy something or I want to do something, I think I'm more willing to spend more money in current context, because I feel like, I won't say I'm shortchanging myself, but I guess last time I've always been thinking in terms of maximizing of contentment and maximizing of the usage of every dollar spent. So I think that might not be as healthy. And right now, if I have the chance, I will want to make people, or make myself, make people around me happier. So yeah, I think that's where my thoughts are in terms of spending money today. And also, I think the last part really is, let's say I have 200,000 today. And I think based on the fact that I alluded previously, I'm saving and investing quite aggressively. And I always have this thought that floated in my mind, saying that at 26 today, at 200,000 at an initial capital, and let's assume that I put in $30,000 a year on a yearly contribution basis to the S&P 500, and I won't use the 8 to 10% calculation. Let's use a 7% CAGR. That will be around 4.5 million in 30 years. I'm always thinking to myself, hey, should I just stop this whole security selection thing? Why waste your time picking stocks when you have this so-called sure win way of trying to build to your retirement? But I guess really to myself, I won't call myself backside EG, but I really do think that I have the passion, and I really do love engaging in discussions with different investors, talking to different people, and I think I have met quite a lot of people that connect with me online, and our discussions usually range in hours. We are not talking about like 1-2 hours. I've talked to people fellow investors that are equally passionate about it. We can go on for 3, 5, 6 hours. I think the longest was 6 hours. We met, sorry, it was 8 hours. We met in the morning at 9, 10 o'clock a.m. and we left at, I think 4, 5 p.m. because he or she had to go and pick up their kids or something like that. So I think it's something that investing or the lifestyle of an investor in security selection has really become a part of me, and it's something that I wish to continuously harness my skill set. I might or might not be able to beat the market because who knows, it's an endeavor that in some periods of time you can beat, some periods of time you don't beat. But I think long story short, it's something that I think is worth pursuing, and it's worth spending a lot of time and effort in because the payout is huge. So I guess that's generally my calling, I guess for now, and how I look at things. So I think as the portfolio grows bigger, I think the daily fluctuations also get a lot more volatile in terms of an absolute dollar term. Last time I think that, I'm losing a month of your salary, that's a pretty big feat. Right now, I'm losing probably 3-4 months of my salary, which is a bigger feat. And I'm looking forward to the time where I'm really numb to even, I guess, mid 5-figure or even 6-figure daily fluctuation. I don't know when I'll reach there, but I do think that if I continue staying on the course, I will probably reach there in time. Whether is it in 10, 15, 20, 30 years, whatever it is, I think it has become a game of capital allocation to me right now, and I'm slowly appreciating and I'm enjoying the whole craft and the skill of an investor. I think the main takeaway after around 40 minutes is that, and I do think that for people that are earning slightly median, they are just starting out, they are earning median income, and they just stay the course, stay invested, be able to spend below their means, put their capital into the markets, be able to withstand those kind of volatility, and just stay the course and be disciplined. I think anybody will probably be able to get to wherever you want to be. At least, let's not talk about wanting to be a, I don't know, centimillionaire, like having 25 million, 100 million. Not that kind of rich standard. But I think you would have a pretty fulfilling and pretty standard, well thought out retirement, having millions in your retirement, even at a median income, lead a pretty comfortable retirement lifestyle. So I think that's just my own point of view. And I think last but not least, it's also the idea where some people are saying that you want to play offensive versus you want to play defensive. Offensive meaning you want to be earning as much money as you can, take a lot of risks, go into those sort of careers or go into business ventures so that you are able to multiply your income very quickly. Or on the reverse, you can go defensive, which is to focus on saving, focus on being better at your skill, being in a job, etc. I think there's no right or wrong in what you want to do. Of course, the ideal scenario is to be offensive, yet at the same time have things to defend yourself. And there's also a very important quote in the investing realm where you talk about the idea where you want to finish first, meaning you want to be able to beat the market, you want to be one of the greatest investors of all time, you must first finish. Meaning you need to stay long enough in the game in order for you to say that you are first in the game. There's a reason why a lot of people are comparing their performance with Buffett. I'm saying that Buffett has 20% CAGR. It's not impressive because a lot of people buying into Max 7 or any other crypto tech projects, Bitcoin, whatever, they've achieved a much greater performance to Buffett. But the key here really is that Buffett is able to multiply that 20% CAGR over an extremely long period of time. That's why his wealth really multiplied by a large extent. So I guess in a way that's why I'm more inclined towards the idea of being defensive, meaning I want to first finish, I want to be able to last through that whole game. And I think a good rule of thumb for the general public out there is to first focus on saving. Then after you have that financial confidence, you have that safety net, you have your 6 months, you have your 12 months emergency fund, you see your portfolio growing 10, 20, 50, 100,000. And that's when you have the confidence to focus on something else and to grow your income. So at least that's how I do it. So I think that's just to provide a different perspective on this whole idea of financial independence, the money game, and how I look at things. So with that, I hope you enjoyed this discussion. I don't know how many of you will watch till the end, but if you did, I'm extremely grateful. I do look forward to when 30, 35, 50 years old Chee Keng comes back to watch this video. And I hope you're doing well, and I'll see you in the next video. Goodbye.